Now, the topic is how to build a resilient economy. I suggest that we start by each panelist making a brief opening statement.
So the resilient economy is, of course, as the word says, something that can withstand shocks, and we have seen several shocks in the past year. The economy seems to have weathered it reasonably well, though one can say that the impact of the virus in the economy or on India or Indians appears to be a lot milder than it was in several other countries, which has perhaps helped the economy bounce back quite a bit. In general, though, if say futures are shocks and we don't turn out to be as lucky on the health side, it would be important for the economy to have a resilient financial system. I think even before going into the pandemic, there was a clear problem with our financial system. The aggregate credit growth was slowing, and it was driving down inventory levels across the economy, which actually meant that even as services GDP growth was holding up, there was a problem with manufacturing GDP as supply chains or several supply chains were starting to destock, most aggressively seen in autos. Going forward, if we need to keep growing at 11 to 12% in nominal terms, we will need a financial system which can continue to provide credit at 13 to 15% growth. And that's one area where policymakers, I think, need to focus, that the financial system needs to be reasonably well capitalized. There needs to be incentives to growth. And that's definitely something to focus on. The second area of resilience, how do we reduce our dependence on external capital? And that's not to say that every country must have a current account surplus, but at times like these, it actually limits the government's ability to intervene and sustain growth. The third aspect has to be in the government's policy toolkit. So it is one thing to be willing to spend. The second is, can you spend without leakage and in a very potent manner? And I think what has happened over the past year is that a lot of gaps have been exposed in the Indian government's, I would say even the general government's toolkit. If we need to target the urban poor, there is no scheme available. If we have a very large informal sector, and there is no direct way in which the government can address their pain. And while by now I think it's reasonably well documented, we all know that the government is also fully aware that the informal sector and the urban poor are badly affected. Those are segments which I think will continue to struggle for even as the rest of the economy is reviving. And our only hope is that the economic growth kind of trickles down to these segments as well.
We are perhaps in an era of shocks, both financial and other shocks. And I think, policy making must recognize that. And perhaps, one thing that has happened is that we are increasingly talking about, counter-cyclical buffers in the financial system, in the banking system, so forth. But perhaps we need to build buffers for these extreme events, which seem increasingly likely, and the gap between extreme events could actually become shorter and shorter. I think Barry Eichengreen predicted that every 9 to 10 years, we'd have a crisis of some sort. But perhaps the duration is shorter. And I think the challenge really is to make crisis management or the management of tail risks an integral part of regular policy making. So we are sort of setting aside something for a rainy day. And also in making policy, there are two things that need to be sort of recognized, and in the design of policy going forward, is one, minimize distortions in the kind of response that you have to a crisis. And I would see something like inequality as a distortion. I would see perverse incentives in the financial markets, the extreme example of which is what happened with the GameStop stock in the US. That to and also to have a very clear strategy for kind of rolling back the most extreme response to the crisis, and not let the economy and the markets get sort of addicted to largesse at its most extreme. I think this is a big challenge going forward. We saw it with the taper tantrum and so forth. In a number of areas, we need to continue with this principle of maximum government, and that will sort of deliver us from more effectively from the worst impact of the crisis.
Ashima, over to you.
Thank you, Arun. I think I'll start with where Abheek ended, because one of the things that is really surprising in this current COVID crisis is how much better we are doing than expected in the beginning. Worldwide, there was, because India has a relatively low income per capita incomes, congestion. We were expected to do much worse than we have, and we've escaped a second peak. And so I would, taking the topic of this session, that we actually are quite resilient. In fact, these days, there's some media I'd read, they're saying India is the most resilient nation in this COVID crisis. So how do we understand this, given the expectations and given the reality? It seems we are not understanding many things about me. For one thing, I'd say that the preemptive early action helped flatten the curve and give the medical system, the systems time to rev up. As Abheek was saying, they worked well. It wasn't just inherited, it was also planning, because this was a unique kind of pandemic we haven't had for many, many years. So, and another thing to notice is that in a democracy, in a very noisy democracy like India, it's very difficult to take tough actions, because if people who are affected really start shouting. So there was so much shouting internally as well as from external experts. But over the long run, so the thing about, you have to be very determined as a government to inflict short-term pain, which will benefit in the long term, and hold with that path. So I think that is also important. And the other reason we've done better than was widely expected, I think, is that we have achieved a degree of diversification. For example, manufacturing, obviously with the lockdown, absolute slump, but agriculture did well. The economy itself has services, outsourcing, and the digital economy held up very well. And we have a lot of expertise in that. Then early on, in these talks, early summer, we would be asked to talk very often on these issues. And I give this example from endogenous growth theory. There is this idea that if there is a natural catastrophe and a lot of physical capital infrastructure is destroyed, but human capital is not, then very often you see a sharp revival, because those are the people. And I think as Indians, the other thing is we don't have, given our numbers and the fiscal constraints, we can't have the kind of transfers that advanced nations have been giving. So people have to fall back on their own resources. And there's a lot of substitution in directions where it's possible to continue to grow. And we saw a lot of that, I think. So necessity was a driver of resilience also.